Hey, welcome to No One Warned You podcast, the podcast where we have no fluff conversations about the things you should know whether to start a business or to grow your business. And today with me, I'm Henry, your host, and today with me we have Tasha Preisner. She is a tax expert, founder of DeMar Consulting Group, and also a Jiu Jitsu gold medalist. So, Tasha, as we start this episode today, tell us about this. How did this happen?
Thank you for having me. I really appreciate it. So, which one are you referring to? The tax expert, the DeMar Consulting Group, or the Jiu Jitsu?
All of those. So let's start with the jiu-jitsu, and then I want to hear about the tax side of things and business as well.
Okay. Well, a few years ago, I was definitely needing a new direction in my life, and I was needing more community. And I just looked around, and there was only one gym in my area. I'm in a very small town, and I went to it. It happened to be jujitsu, and I did one or two classes, and that were free. And it was just so much fun. I became addicted right away. Now, I've never been an athlete. I'm 43 years old. In high school, I was very much a nerd. And so getting into athletics was very new for me. But now I go like 3 to 4 times a week. I help teach kids to do and the new people how to do jujitsu, and I even compete. And I'm probably in some of the best health I've ever been in, except for a number of broken body parts. But that comes along with the age in the combat sports and a lot of bruises, but I enjoy every bruise I get.
So, and you're a gold medalist, right?
I am. So, one of my favorite competitions to go to is the American Grappling Federation. And I have been to the one in Dallas multiple times, the one in Tulsa once, and I do have my gold medal with me. I've got 2 gold medals and I've got 3 silver medals. And I'm known at my gym for loving to choke people. So I know multiple ways of choking people.
Oh,
That's how I've won, is by my guillotines.
I see. I see. So, not only we gotta be careful around you with numbers, but how we walk around you.
Yeah, don't give me your neck. Definitely do not give me your neck. That's dangerous.
I see, I see. And Tasha, how did you end up in accounting and eventually founding DeMar Consulting Group?
So, when it came to accounting, I was a secretary to begin with, and I worked at a school. The school lost their accountants, and I said, something I'd like to try to do. I moved over into their accounting department. They gave me a QuickBooks for Dummies book, and I just read it and started trying to do it. Decided I love doing accounting, and that was about 20 years ago. And most of what I've learned hands on through lots and lots of mistakes that I've made and had to fix myself because there was no one to teach me how to fix my own mistakes. And through that, it's made me a much stronger accountant. So I've been doing this for so long that when I first started sending forms to the IRS, it was on a typewriter.
Some people here, they don't even know what that is.
Yes, and having to send forms on a typewriter teaches you a lot of patience, and it teaches you not to make very many mistakes because every time you do, you have to throw the whole page away and start over. You can't just hit backspace, control Z on a typewriter. You have your one page and it's hitting print on each little line there, each letter, and you put the wrong letter in the wrong space. That whole page gets thrown away and you start again.
Something some people here also don't know what that means, right? What? You can erase it, you gotta throw the whole thing away?
Gotta throw it away. And that's because, yeah, Google typewriter. That's the best I can tell you. I'm sure there's YouTube videos on it.
Oh, for sure. And Tasha, and how long? have you been in with the how long has it been you founded DeMar Consulting Group, or you joined it?
So, when I was working as an accountant at a school, I knew that I wanted to help people. And I could only help one company at that time because I was working 9 to 5 as an employee. When I left there, I started my own firm as a solopreneur, and that was Preisner Financial Services. At that point, I was really limited by who I could help just by myself. Because at some point, I just got to this was too many tax returns for me, too many bookkeeping clients for me. So that's when I started thinking I'd kind of like to join up with somebody and create a partnership with departments, with structure, with employees that we could help more people instead of just what I could do by myself. And so that's where the idea of DeMar Consulting Group came from, where we could have structures and not just one or two people working together. And it that was a whole new world for me, but it's been really good also because then I could go from helping just a handful of people to helping a lot more people. And from there, I went from let's see if we could just make the tax world a better place as a whole through tax advocacy. And that's kind of been my passion side project.
And I like one thing you said that I learned through my mistakes. I learned so much, and that made you a better accountant. And the whole purpose of this podcast here is just bringing out good information, advice, and things I wish I knew when I first started business. Now it's been what, 17 years now. And so we do learn from our mistakes. And I would like to hear from you, Tasha. Uh, in this episode, we're going to talk about your numbers are lying to you, and I would like to hear out of your experience as an entrepreneur or what you've observed with your own clients. Um, what are the financial blind spots that where they fail and eventually they get hurt?
Well, first off, founders have a tendency to not really prioritize good bookkeeping. They have a tendency to believe that their gut instinct is enough when it comes to their money. And I find that their gut usually lies to them almost always. Unless you're some just weird freak of nature, your gut always lies to you. And it's that your brain will tell you that you make more money than you actually do, and it'll tell you that you spend less than you actually do. And then you'll look at your bank account and you'll say, why don't I have enough money? Where did my money go? Because you think you're making more money than you're actually making. And your brain isn't translating that I'm spending too much, I'm not making enough. And so that's one problem right there, is that they're not really putting the numbers down and looking at them on a regular basis. Then what they end up doing is they start with a spreadsheet. They Google Doc and Excel spreadsheets, and that's then not really giving them a reality either. It's just kind of giving them something that they can make a tax return with, and it's not giving them good decision making. Then their next step is usually, okay, let's hire a secretary that also knows how to use QuickBooks. But the problem is that the secretary usually doesn't know enough about QuickBooks to give them good enough numbers. And so they're putting their numbers in all these random places, and they're not really reconciling the books. Their bank account hasn't been reconciled in 6 months. Their bank account's really off. They don't know why their bank number is so different than their QuickBooks numbers. They don't know what the balance sheet even is or how to read it, much less reconcile it. And so they're not getting up-to-date data. They're not getting accurate data. Even if it was up to date, it would be wildly inaccurate oftentimes. And so you're not making correct decisions based off of data, again, they're making decisions based off of their guts, and their gut is still lying to them. And then they wonder, where'd my money go? Because I thought I made.
And
It becomes a problem.
I love it. This what you're talking about, that the way what our brain tells us. And would you say does that come from any? Do you know if you know the neural side of this? If it's a way of denying reality, or if it's just based out of perception rather than data? Do you know where that comes from?
I don't know. I wish I did. I just know that nearly every time I speak to a client, this blind spot seems to be there. Of when I show them the numbers, they almost want to just argue with me about it. Of no, this can't be right. This isn't what I thought it was. And so then when we start opening each line item on the P&L and I show it to them and ask them what's different here, what should be here, and show them one by one on it, they can't find a problem within it. That's when it starts dawning on them that the numbers have to be true, especially whenever I start showing the balances on the balance sheets line up. There's nowhere else to go here. Everything is reconciling. You can't find a mistake in these books. And if you can't find a mistake, I can't move money around anywhere. This is what it is. But at first, it's usually when you first show them the financials and it's different than what their mind tells them, they will tell you you're wrong, and that they'll deny that that's even true numbers.
Well, that's so curious to know, actually. And for those that might not know, what is P&L, Tasha?
The P&L is your profit and loss. On your profit and loss statements, it's almost like a movie that'll show you what your money has done over a course of time. Your balance sheet is like a picture. It'll show you a static shot of what your wealth is at one point in time. And so you really need to have those two statements run simultaneously. On my personal bookkeeping, I keep up with those almost daily because I'm an OCD accountant, but most companies do this monthly. But most business owners get used to reading the profit and loss because it's a lot easier. It shows the income that's coming into your bank account and the expenses that are coming out of your bank accounts. So that's the easier one to read. Whereas your balance sheet will show you how much you have in assets minus how much you owe in liabilities, and then what your company has left in equity. And that's a lot harder to read and a lot harder to wrap your mind around. It's a very important document, but it's usually the last one that business owners learn to read because it's a lot harder to read.
I see, and it's funny you're saying that as entrepreneurs we undervalue it, because that was my situation. So I started a business, a restaurant in 2009, and then it grew to a chain with 12 locations in 10 years. And I remember that I didn't really care about accounting and tax and bookkeeping. And then I would just tell my accountant, hey, just put whatever you think is the right place to have those numbers. I really don't care. But then when I sold my shares in the business in 2020, that's when I had issues, because then the buyer was looking at the reports and it didn't match the numbers I gave him in the valuation, and he would question everything. And then I had to go around just to show him that the valuation was based in good numbers, but the reports were wrong, and I had to fix those. He made me fix everything, like 10 years of bookkeeping, so that it would match the valuation. Eventually, we made the deal, but it made it way harder. And the thing is, the guy was an accountant, so he knew how to read those uh, in a lot of detail. So anyway, so I know how
That's
that's
important.
and Tasha.
We like to teach our staff accountants to go through those two reports with their clients every single month and teach them how to read it just for that reason.
In if what would you say for the business people, entrepreneurs, people watching this episode here, what would you say? Because business people, they're busy and they have so many things to take care of, and definitely they're not going to spend a lot of time looking at those. But what would be your recommendation of when they should check the reports, for how long, and what are the information, or what should they be looking into?
At the very least, look at it monthly
Okay.
and look for major negative numbers on the balance sheet. It's fine if it's depreciation, but anything else that's negative numbers usually is a red flag on the balance sheet. That's the first thing I look for. I also have a tendency to look month to month on the profit and loss to make sure there's nothing that's standing out that's weird. And once you start looking at it monthly, you start getting used to what's normal in your business, so that when you see something that's out of normal for one of them, that it's a red flag that something went wrong.
Okay, so there is this side of things where as you read it and you get more knowledgeable about it, and it just starts you get familiarity, and it makes more sense
Yes.
and easier to analyze it, right? That's what
Right. You start knowing your numbers just like you know everything else about your business. And so then whenever you see an outlier, it starts to really stick out to you.
I see. And as we're about to end this episode here, what let's say I come to you, Tasha, and I Tasha, I'm about to start my business. What is the one thing I should know about my numbers, bookkeeping, accounting, and taxes?
You don't have to have a full-time bookkeeper. If you don't have enough business to keep a full-time bookkeeper busy, your numbers are important enough to at least outsource it to someone who knows some good basic bookkeeping. And so I would suggest, don't use your guts. Don't just find someone who knows a little bit about QuickBooks. At least outsource it to a qualified accountant that can do it for an hour a month if you don't have very much bookkeeping to be done, and get your reports correctly every month.
Tasha, I love it. So much value in such a short time. And as we are about to end this first episode, this is a series with 3 episodes we're gonna do with Tasha, and we are gonna talk about one thing that I love it, which you said that you had the ambition to create something that would be more structured, that would that could grow, and that's how you prepared your business. And so, in the next episode with Tasha, we're going to talk about how you can actually create a business that run without you, or how you can create structures to grow your business. I'm very excited. Tasha, thank you so much. And I see you on the next episode.